What's up, traders? Welcome back to the channel, the Trade Space Z Limited. If you missed yesterday's massive move in gold, or worse, if you're on the wrong side of it, you won't want to miss this video. Today, we're doing a full, no hold barred breakdown of exactly how I spotted and executed a long trade from the 4253 area, riding gold all the way up for the massive monster profit. 2k load to 15k solid profit. That's massive on one freaking move. In this video, we're gonna cover everything: the key support level I was watching, the precise entry, my risk management, and exactly why I didn't shake or phase by the noise in between. And I got the actual chart from my platform to prove this. This isn't hindsight magic. This is a repeatable process. So grab a notepad and let's get onto it. Before any trade, you need context. You can't just jump in blind. So let's rewind to the setup. Gold has been in a strong impulsive uptrend for a while, but recently it's entered a period of consolidation. You could see the pullback. It was really obvious. For me, pullback in a strong trend is not a reason to panic. It's a gift. I love pullbacks. It's the market offering you a better price to get in. Like when you see precision entries, you have those early zones for you to get into the market. You can see the market structure. We had a clear resistance zone up there around 4344, and then price pulled back. As a team here, one job we had, the best job we had, was to find the high probability area where the buyers were likely to step back in. That area for us was the 4250 to 4255 zone. Why? Let's get on with it. 1. The previous resistance turn support. This area had previously acted as a resistance level. Once it broke, these old resistance often flip into new supports. It's a classic principle. If you are a price action trader, you would actually see this clearly. It's not hidden, it's always there as a result of the change in state of delivery. The second thing you need to fully understand there was the Fibonacci in confluence. If you really use Fibonacci, you draw it and you see the tools that were being used on it based on the last significant low or high. Everything was sitting around the 4250 to 4255 zone. This is where smart money often enters. This is where smart money often re-enters trends, looking at how everything was. The third thing you need to look at was the order block and the fair value gap. On the lower time frames, I could see a clear bullish order block and a fair value gap from a previous strong up leg that was sitting right there. The market was essentially returning to value. So my bias was firmly bullish and my laser focus was on the 4253 area for a potential long entry. But a zone isn't a trade. A zone alone isn't a trade. We need a trigger. We need to see the buyers actually showing up. I didn't just buy at 4253 and hope. I needed confirmation. Yesterday, as price approached our key zones, I was actually for a bullish price action signal. What did I see? A nice clean bullish engulfing candle or a pin bar on the H1 or M15 chart. That was the green light. That was the goal. That was the movement. That was the market telling and saying to me, yep, the buyers are here and they are defending this level. So my entry was fixed. It's actually a buy limit I used. If you can see it from everything, I used the buy limit. At that zone, it was 4253. Based on my stop loss, it's non-negotiable. Looking at the chart, how it is, majorly how I do trade and place trades, I fix it like, let's say from, if it moves $10 down or $5 down, that kind of thing, but max $10 down, I'm off. It's as tight as that. Why I use tight stop losses is because looking at how the market is on this particular zone, the area of that support zone was around 4242. Looking at it, it's very tight and logical. Anything that passes that will give me another movement for the markets. So I didn't want to just gamble it at all. What we do here is precision entries, and we are really of, let's say, 90 to 98% right. Every other thing based on flop is the market, because we do not control the market. I always say we do not control the market. Why tight stop loss? If buyers were truly in control at 4253, price should not dip significantly below it at all. When it comes to your precision entries, that's why your stop loss will be tight. If you put too wide of a stop loss, it gives you crazy drawdowns if you're trying to do precise entries with high volume trades and all. If I did that, my thesis was wrong, I would get out ASAP. But looking at how it was, I set my entry for that zone. Now for the fun part, profit targets. I always use a multi-target approach. The first target CP was set at a recent minor resistance on our screenshot there, or the video and everything, around that 4291 zone. You could see it, everything was plotted. This is where I will take partials. Normally I will take partials, maybe 50 of my position, 70 of my position, depending on how the market gives and how the market moves. This locks in some gains and lets me breathe to an extent. Yeah. So looking at that momentum ride, this is where most traders fail. Yes, I'm clearing it out here. This is where most traders fail. They take their full profit too early and let a winner turn into a loser. Our process here is mechanical, and we plot it with DXY. Yeah, so looking at how DXY moves, we have a guaranteed and sure movement of the market with respect to gold. Yeah, that's how it is. You could see clearly how the buy limit was set, and we just waited for price to get there, setting our take profit, full take profit around the 4355 zone. So looking at the move, there's every tendency that gold should give, let's say, just based on yesterday, it gave like, yeah, real nice, it's 1 to 8, right? 1 to 7.5, 1 to 8 risk or reward ratio, because of all the lines that you see there. As price broke through there, you see it's like the lines that are there for 4305. Around that zone, you see the one for 4319 and the likes. Yeah, so all those ones were like profit targets in case the market goes haywire. We do not control the market at all. We do not control the market. So see how we're waiting patiently for the market to get to that zone, plotting each inverse fair value gap there in order for it to peak. So we're waiting patiently, and once the market peaks, we're good to go. We have to just be patient and hold on for the market to move as planned. We don't control the market. If it goes on a loss, it goes on a loss. That is how the market is. The market gives, the market takes. But make sure the market gives more than it takes with your risk management. That's why risk management is key. So look at it, we're waiting. You can see the up down up movement that has been predicted. Waiting patiently for it to hit that zone, and once it peaks, we are good to go. Wow, nice. So the market has started, and you can see in speed. Just watch it. The drawdown already counting, and there. Yeah. So that's how it looked. It was crazy. Yeah, it was so crazy that based on schedules, I just left the recording. Yeah, I just left the recording because I just had to just get there. The particular way you just give your mind this peace when it comes to your psychology. Psychology is key. Yeah, psychology is key because there are two things that does each trader. They have two things. That's the IQ and the EQ. Those are the two partners there. One is very vibrant and the other one is silent. If your emotional quotient, that is your EQ, is not in control, as a trader, you would most likely lose that trade. Most likely lose that trade. The market gives, the market takes. And looking at how this was, there are some exhaustion points around that zone. And you see that we needed to try as much as possible to just stay on the chart for as long as we wanted. Then looking at how the movement was, it was really, really crazy. Really crazy because we're trying to plot DXY and we saw how DXY was trying to move and combining each zones, because you need to know this key, as I said earlier, grabbing those parts, because I'm releasing little nuggets that you guys have to watch out for. DXY or USD index, that's the dollar index. It's actually being plotted against gold. Not always, because there are sometimes the DXY will be bullish and gold will be bullish. Yes, those are when it has reached higher grounds that they are both fixing markets for each zones as regards the let's say, how will I put it, let's say you know how things are for liquidation and moving into another portfolio, that kind of thing. So that's how it works. You really need to pay attention to gold and pay attention to DXY if you really want to trade gold and be a successful gold trader. You need to really see that zone as keys, things that you need to fix in the market for you. You can see we have a drawdown, but it's kicking in because the buyers are trying to push. The buyers are really holding positions there. Really, I didn't stay. It was that crazy that I left the chart for long and I had to do other things for the business here. That's how it is. We have other things that we do for the business. So this was just something that we had key, and said that we have to start and be pushing out contents for people to really know and understand fully how trading works. We try as much as possible to let you in on key stuffs here. That is why we are here. We are here to serve. We are the Trade Space Z Limited. So steady looking at how the market is. We took it very paused and a light, cool break there for us to just say, okay, let the market do its thing. And behold, we came back and it hit TP and passed TP. Yes, it hit TP and passed TP because it was that crazy. We had to see, oh wow, this was really something that we didn't expect would happen really fast. We didn't expect it to happen really fast. We wanted to take the trade for say a day or two, but that's how it happened within 24 hours. Within 24 hours, and it was already pushing massive profit. Kept coming back to seeing profits is crazy because you'll be like, yeah, every trader can relate. There's sometimes you come back to the trade and it will be like, where's my entry? And you look at your balance and equity and it's increased, and you now say, oh wow, that kind of feeling is exhilarating. It's really good. Yes, it's good. So let's summarize the key lessons from this gold trade. Really, I need you guys to fully pay attention to this, because everybody always try to overthink trading. Because I don't know, but really, I'm not trying to spice anything up. Trading is difficult if you do not know what you are doing. Even when you know what you're doing, you have to try as much as possible to streamline any possible loss that may occur to maximize your potential wins. So let's summarize really for all that you need to really put through when you want to know this gold trade. 1. Trade with the trend. Always know the higher time frame trends. Looking at how everything was from the first, you get, when we started this, we were looking for a buy to pull back in an uptrend, not trying to pick it up. Yeah, it was cleared like that. Don't try to pick it up. Wait for the pullback. If you want to sell, you wait for a pullback for it to sell. If you want to buy, wait for a pullback to buy. So you don't always enter in between. That is why there's point A to point B when it comes to trades. Trade with a trend. The trend is always your friend. The second thing I need you to fully understand is that confluence is king. Really, confluence is king. Don't rely on one indicator. Basically, I don't know. The major key indicator for our team is DXY majorly for major currencies and all, and we go down to using market structure with the support and resistance with Fibonacci and purely price action confirmations. Nothing more. We try as much as possible to make our charts naked, like naked charts. Naked charts, that's what we do. Fully naked charts. If you want to read more naked charts, here there are books. There's a book for it here. You should read it. It's a nice read. To be in this game, you need to study, you need to work hard. You need to pay attention to details for you to stay in this game. It's not just about buying or selling. There's more to it than meets the eye. So looking at everything here, with the market structure and all the Fibonacci, the price action confirmation, the more reasons you have for a level, the stronger it is. Yeah, the more reasons you have for a level, the stronger it is. And the third thing I need you to pay attention to is have a clear trigger. A clear trigger. I'll repeat again. A zone is not enough. A zone is not enough. Not the one you just draw a rectangular box and you say, okay, we have the stuff and we fix our this thing. A zone is not enough. Once you know the major trend, you scale down to the lower time frame. Look for confluences that actually trigger your bias. You don't just place it on measurements. You use mathematics, you use measurements, you use so many things. There's a lot, and we have our mentorship programs that's ongoing. Our people are really balling. yeah. So have a clear target. A zone is not enough. Wait for the price to tell you it's respecting the zone with a clear bullish or bearish signal. Yeah. Then the fourth thing I need you to pay attention to is you manage the trade well. You manage the trade well. You don't just set and forget. You manage the trade well. Yeah. Even as I left as I left the chat when it comes to recording, my team members had screens too that they were using to track it because I was busy. I needed to do other things you get for the business. So that's it. Then use multiple target controls, take partials, move your stops to break even, trail your stops or capture big moves. Yeah, this is the exact process that can be applied to any market, any time frame. But the key thing now is about discipline and patience. Yes, discipline and patience. If you found this deep dive helpful, then do me a huge favor, smash that like button, subscribe and turn on notifications so you don't miss the next trade breakdown. Comment below, you see all so we can make it better. That's all for today, traders. Stay disciplined, manage your risk, and I'll see you in the next video. Peace out, gang, we're in the building.